Hi everyone. Good morning, good afternoon, good evening, and good day to you. Anywhere you may be joining us from all over the world. So this is TOSJOHN Consulting, your strategic business growth support partner. If you are conversant with our YouTube channel, you will know that we are the voice of entrepreneurs, business owners, and professionals all over the world, from Africa to Asia to America to Europe to Asia to any continent and any region you may be all over the world. So we are always visible on this YouTube channel, ensuring that we are bridging the knowledge gap for business owners and entrepreneurs, and of course, and they are truly scaling in their business. So we have a lot of videos, over 180 videos, and more are still coming. And they are practical videos, actionable videos that will bridge the knowledge gap for you, as for CAC, for taxes, for this Nigerian tax reform act, everything that is contained there. We brought you a video on that, for audits, for accounting, for business strategies and business compliances. We have a lot of videos for you to watch. So please feel free to watch all these videos. And of course, you can reach out to us on all our professional consulting services. So let's quickly dive into today's video. So greetings to everyone, right? Business owner, entrepreneurs, and future millionaires. Of course, the topic of today is debt versus equity. What Nigerian entrepreneurs should choose. Debt versus equity. What Nigerian entrepreneurs should choose. And when we talk about Nigerian entrepreneurs, yes, we may be in Nigeria, but all these strategies are also useful to any business environment all over the world. So you are welcome to TOSJOHN Consulting, where we simplify business, finance, and compliance for Nigerian entrepreneurs and any global business entrepreneurs. So in today's video, it is a very important video: debt versus equity, what Nigerian entrepreneur should choose. So we will ask you a very serious question. Have you ever considered taking a loan from the bank or any other place? Thought about bringing in an investor? Have you thought about that? Or you felt confused about what option is safer? Which one is safer for you? Because one wrong financing decision, right, can kill your cash flow. One wrong finance decision can kill your cash flow. And you know we have been bringing you video on cash flow. And cash flow is the oxygen that your business needs to survive on, right? So a wrong financing option can kill your cash flow. And when your cash flow is killed, your business could be strangled. Your business could suffer for it. So make sure you don't lose control. Make sure, of course, you are in control of your company, right? It may, if you get this wrong, this video, this information we are bringing to you, it could make you lose control of your company. Please subscribe to our YouTube channel. Thank you for joining us. We appreciate you. Or you could be trapped in a long-term financial stress. Yes, you may be trapped in a long-term financial stress if you get this thing that we are dishing out to you wrong, this live streaming session. So you need to stay with us. This session will save your business. This session will save your business. Thank you for very much. We appreciate you. Thank you for stopping by to join us on this live streaming. Please make sure you subscribe to our YouTube channel. Please give us a thumbs up on this video, and of course, share with other business owners. We appreciate you. We value your time, and we believe that you will gain value on this video as well. Thank you very much. Thank you. We appreciate you. That's Builder Man. God bless you. Thank you, Rennie Braids Wings, we appreciate it. Thank you for stopping by to join us on this live streaming. So in section number 1, what is debt? Oh, thank you very much. We appreciate you. Thank you very much. So section number 1, what is debt? What do you understand by debt? So we start with debt financing. You can finance your business by debt or by equity. I'll be giving you a practical understanding on this so that you will know choose which one, right? So let's start with debt financing. Debt simply means borrowing money that you must repay with interest. Debt means borrowing money that you must repay with interest. You borrow it and you must repay it with interest. So in Nigeria, for example, this includes loan from Access Bank or any other bank, intervention funds from Bank of Industry. Then we have microfinance banks and we have cooperative society loans. So now here is the truth of all these debts, right? They have advantage and they have disadvantages. And if you are conversant with the MPR rate, that's the monetary policy rates in the bank, the current monetary policy rate is capped as between 25 to 30%. Yes, and it is a whole lot, right? But as debt is also good and is also bad, but there are some instances that you need to choose debt or financing. So we'll be getting to know those instances and situations that will make you to choose either debt or equity to finance your business. So the advantage of debt is this: you keep 100% ownership of your business. 100%, you are the owner of your business, right? No investor controls your decision. No investors control your decision. After repayment, the profit is fully yours. After you pay your debts, all your profit is fully yours. But here is the danger of debts. As you have advantage, you have disadvantages. So the disadvantage is that monthly repayment, whether sales comes in or not, you have to pay on a monthly basis based on your repayment plan, and it is monthly. There is high interest rate in Nigeria, like we told you earlier on, the MPR rate between 25 and 30%, and it's a whole lot. So there's risk of collateral seizure. Your collateral, whatever you are using to stand in to collect that loan, might be seized in case of default. And if your cash flow is not stable, debt can suffocate your business. If your cash flow is not stable, debt could suffocate your business. So let's look at section number 2. What is equity? What is equity? So we have equity financing. Now let's talk about equity. What does equity mean? Equity means selling part of your business in exchange for money. Selling part of your business in exchange for money. That is what equity means. So it means that you bring in an investor, you give them shares, they own part of your company. That is what equity implies. It means you bring in an investor, you give them shares, and they own part of your company. That is what equity is talking about. And we have advantage of equity. Number 1 advantage is that no monthly repayment pressure. No monthly repayment pressure. Number 2, shared risks. You share the risks with those that are coming in as your investor. Then there is investor may bring connection and experience. Investor may bring connection and experience, which is also good, right? Please give us a thumbs up, like our videos, share it with other business owners, because today's video, it's a very important video and it could, speak well of your survivor or bankrupting your business if you don't take action on it. So the disadvantage of equity is this: you lose full control. You don't have 100% control again. The part of the share that you give out in exchange of money, you lose the control of it. Then number two, you share profits. You have to share profits with your investors. The major decision may require approval. Major decision making of your business will require approval of your investors. Then equity is powerful, but it changes ownership structure. Equity is powerful, but it changes ownership structures. So let's look at section number 3. What should Nigerian entrepreneurs choose? You have equity, you have debt. You've seen the advantage, you've seen the disadvantages. So which one should Nigerian entrepreneurs choose, or any other entrepreneur in any business environment in any part of the world? This is where strategy comes in. This is where strategy comes in choosing between debt and equity. If your business is already profitable, this is the strategy. If your business is already profitable, if your business is already stable, it has a stable cash flow, if it needs short-term funding, debt may be better. With all these factors, concepts, elements we've listed, if your business is already profitable, if it has a steady cash flow, and if it needs short-term funding, debt may be better in this case. So you can see the instance where you need to choose debt as against equity, right? But in another instance, if your business is, number one, a startup, if you're a startup, if your business is scaling fast, and if you need mentorship and structure, equity may be better. So you can see the instances where you choose equity against debt, debt against equity. So you need to take note of all this information. If you need to watch this video again, please watch so that you get the full gist and information. Please subscribe to our YouTube channel, like our video, and share with other entrepreneurs and business owners. So equity may be better in this instance we just stated. Even companies registered under the Corporate Affairs Commission use a mix of both debt and equity. So you can use a mixture of both debt and equity, since both have advantage and both have disadvantages. So you can look at those instances and mix two of them together. So in section number 4, the smart hybrid strategy. Here is a smart hybrid strategy. So here is what smart entrepreneurs do. Start with equity to grow. Start with equity to grow. Build stable revenue. Then use debt strategically. Use debt strategically. So debt should accelerate, not finance survival. Debt should accelerate growth, not finance survival. So if you use loan to solve cash flow problems, you are postponing collapse. If you use loans to solve cash flow problems, you are postponing collapse. The collapse of that business, you are postponing it, right? So you need to be wise and strategically make decisions. So here is a practical example of this live streaming title. Let's say you run a logistic business in Lagos, commercial center of Nigeria. Option A, you collect a 10 million loan at 25% interest. Option B, an investor gives you 10 million for 30% equity. So ask yourself, can you comfortably repay monthly if it is debt? Or is it safer to share ownership and grow with 30% equity for 10 million? So this is where financial clarity matters. This is where financial clarity matters. So common mistake Nigerian entrepreneurs make. Common mistake Nigerian entrepreneurs make. Taking loans without cash flow analysis. Giving away too much equity in too early. Giving away too much equity too early. Not documenting shareholder agreements. Ignoring cost of capital. So at TOSJOHN Consulting, we always say financing is not about money, it is about structure. Financing is not about money, it is about structure. So as we close this live streaming, here is the action plan. If this session has added value to you, which it always does, please type value in the comment section. Like and share this live streaming session. Subscribe to TOSJOHN Consulting. If you need help deciding between debt and equity for your business, send us a message or email, or you can shout us up. We have a contact line on this YouTube channel. We help Nigerian entrepreneurs structure their businesses properly to stay compliant and make financial intelligent decisions. So you need to remember this. The goal is not just to get money. The goal is to build a sustainable business. Thank you for joining TOSJOHN Consulting. We'll see you in another live session. So we are coming back in a few minutes to bring you another live streaming session. Please like our video, subscribe to our YouTube channel, and share with other business owners. So if you need all our professional consulting services on CAC, on accounting, on audit, on taxes, on business strategy, we are your strategic business growth support partner. So feel free to reach out to us. Let's journey with you and take your business to a greater level. Hi, okay, Manny, thank you for joining us. How are you doing? We're just rounding up on this live streaming. Okay, okay. We are coming back now because we need to end. Okay, okay. Let's hear you. Let's hear you. It's fine. Let's hear you. What's the advice? Let's hear from you because we are here because of you. You are a professional business. So, what is the advice? Let's hear from you. So, Kimani is, stand, uh, will I say, I won't say fan, a subscriber. We are already like a family, right? He's always joining us from Australia. And that's the beauty, of this platform. Global platform is connected to every, client, any country, continent of the world, from Asia to Africa to North America to Central America to Europe to Asia, any continent of the world. So we are connected. Okay. Oh, yeah, yeah, yeah. You are, definitely. You are. Yes, you are. So yes, you are more than a fan. You are a family now, right? You are more than a fan. You are a family now. You are part of us. So you need help on budgeting. Okay, that is a nice one. Yes. So what will happen is this. Uh Check our YouTube channel. You will see our contacts, right? Shout us up. Let's take it further with you. You will see our WhatsApp contact. So shout us up. Let's let's give you help on this. And we also, yes, we have video on budgeting, but there's no problem. So let's give you the needed help on this. Let's work with you on this budget. So check our YouTube channel. You see our contact, right? You see our contact. Just shout us up on that contact, and let's you know support you on this budgeting. Thank you very much. We appreciate you. So we see you in another live session in a few minutes time. Bye for now. So Kimani, please shout us up. Our contact is on our WhatsApp, is on this YouTube channel. Just check on the description. You will see our WhatsApp contact. Shout us up and we'll support you on this budgeting. So bye for now. Bye. We are coming back. Bye for now.